What's up, guys? It's Ricky Analog here for webisode number 3 of How to Dig. Today's episode, we're going to cover financials at a glance. So we're going to hit up the 10Qs and the 10Ks and try to show you guys how I get a quick overview of a company's financial situation. And this is usually done, pre-market. Takes about 5 to 10 minutes, depending on the ticker. And it should be quick because it shouldn't take too long to get a fundamental understanding of whether somebody's cash strapped or not. But there's other things you'll find in the 10Q and 10K, especially if you do like deeper dives. And there are definitely times when, the 5-minute, 10-minute little quick session in the morning is not going to cover the full amount of what you need to do the research on a certain company. So what I always do is, if a company is something that's going to have a day 2, I'll go home and do a deep dig after the market closes. But pre-market, it's usually a quick 5 to 10 minute session on it, and I'll try to get you guys thoroughly caught up on how we get that done. But as always, guys, let's jump right into the disclaimer. Everything we talk about is just for informational and educational purposes. It's not a solicitation to trade. I am not licensed to give any sort of investment advice, so do your own research. Trading is risky. This disclaimer will be in the description of the YouTube video, so please familiarize yourselves with that, guys. So we'll jump right into it, guys. Here's BAMSEC. By now you should be getting familiar with this, and we're going to try to use some examples that are going to be relevant since they either ran today or something that's probably going to start popping up since we're hitting that low float mania again. It's maybe going to calm down a little bit now that we just hit earnings season, but we'll see. So BLNK ran today, and there was actually no surprise at all. They put a PR out today. In fact, if you had been digging on them in the past, you were almost probably expecting a PR today. But as always, guys, the first place we're going to start is with the most recent information. So we're going to jump right into the most recent 10Q. And I've got a Word document open, guys. I always do when I'm doing the initial dig on a company. And so we're just going to put the ticker, and I always put the date as well, because I always want to be able to say when did I go and find this information. And then I also like to make it a bullet point type thing, actually. And hopefully you already know this, guys, but in case you don't, because I am trying to cater towards people that are very basic beginner level of reading SEC filings. If you don't know this already, the OS is in the first few paragraphs. It's on the first page of the 10Q and the 10K as well. So now it may not be the most accurate OS, but I'll show you how to find out if it is or not. But it does tell you the date that this OS was calculated. And so as of August 9th, which is just a little over a month old, that was the OS. And what I'll do is I will put that as the first thing that I'm putting in my little scratch pad of whatever I'm going to find on this company. Okay, and so I leave a space after it for the float, which you can't calculate till you go find it somewhere else. But we'll jump right down. The next thing I always look for, guys, is the cash situation. So on a 10Q, the financial statements, there's 3 of them. There's the balance sheet, there's your P&L, and there's your statement of cash flows. Those are your 3 main financial statements. They're all going to be the first thing you find in a 10Q after the OS, obviously. But so if you scroll down, here's your balance sheet, guys. And if you don't know, a balance sheet is comprised of your assets, which is on the left side of the balanced equation, and on the right side you have your stockholders' equity and your liabilities. And so the way a balance sheet works is if you add up the liabilities and the stockholders' equity, they need to equal your assets, and that's why it balances. So you can see the first thing I'm looking for, guys, is the first number. That is your cash and cash equivalents usually. And the reason that matters so much is, it's cash, but also it's your most liquid asset. So if you need to pay something off, cash is what you can do it with immediately. So I always copy that cash, and we're going to put that right here. And in fact, I'm not even going to take up that much space. I'm just going to do 24 mil, and I always put as of EOJ, which is end of June. Make sure you guys know your own short-term terminology or whatever I forget what you call those things, shorthand, sorry. have your own shorthand, but make sure you're consistent with it. So like if you guys ever see EOJ on any of my Ricky tips or whatever, that's end of June. Very, very seldom, sometimes end of July, but it doesn't, that part won't matter. So now we have their cash as of the last Q, okay? Now the next thing we're going to do is we're going to look at the total current liabilities and the total current assets, and we are going to compare those two numbers. And there's two ways to compare them. The first one's called a quick ratio, and you're going to divide the total current assets by the total current liabilities, and that tells you how solvent somebody is. That means if they had to pay off all their near-term debt, how many times over could they do it with their liquid assets? So current assets is going to be just under 25 million, current liabilities 7 million, so a little more than 4 times over they could pay that. So they're very liquid, or they're very solvent, guys. They do not have a cash problem. The other number we're going to look for is, you still use these same two figures. We're going to take the 25 million and we're going to subtract the 7 million, and that's going to give us 18 million. That is your working capital, and that is the cash that if you had to pay off everything, you still would have to run the business. So I'm just going to put right here 18 mil working cap, and then the next number, that's pretty much everything that I need from the balance sheet. Now there is a ton of other stuff in here that's very important, and like I said, when you come back to do a deeper dive, you can look at those things, like the fact that their cash went from 185K at the end of December to 24 million. You might think, oh God, this company must make tons of money, but as you're about to see, that's not quite true, and that's often the case. So just because you see cash go up doesn't mean that the company generates a lot of cash from their business. So if you scroll down, now you have your P&L, and you see it does a 3 and a 6 month, and you see their revenues, you see all their expenses, their gross margins, you see their and their net income or loss. But how did they get so much cash if they had a net loss? Well, we're going to get into that, and that's the statement of cash flows. We're going to pull, and actually I'm going to preface this with a little bit of a disclaimer, and that is we're going to go find the burn rate. Now the burn rate, I've seen it calculated different ways from different people. I've actually had DMs from people asking me why I calculate mine a certain way. I can tell you exactly why I calculate mine the way I do, and why I am fully confident in the numbers that I get because of knowing where the numbers came from and what they represent. I also know how other people calculate theirs, and I see why they do and where those numbers come from, but I still think that the way I do it actually gives me a better understanding of what your burn rate actually tells you. And burn rate, if you don't know, is how much money every month that the company burns or goes through to keep their business running. And the reason that's important, obviously, is like now we have their cash. We know they have 24 million cash at the end of June. So how long, if they didn't make any money for the next foreseeable future, how long could they run the company with that 24 million? Well, you need to know how much they burn, how fast they burn that cash in order to extrapolate that out and find out how far out that lasts them. So we're going to get that from the statement of cash flows. And so this here it's a neat and interesting chart, and we'll come back to it, but we're going to actually go right under it, and this is the statement of cash flows, guys. It's broke down into 3 parts. You have your cash flows from operating activities, which is money generated from actually running the business. And then you have your cash flows from investing activities. Just like a human, businesses can own or sell equities, securities, not mutual funds, money market funds, all kinds of investment devices. And so that's where you would put any gains or losses they realize from investing activities. They also have a section from financing activities. Now, if you watch these videos, I'm assuming that you probably know a lot of these companies raise cash from doing dilutive offerings and all kinds of other shady stuff, right? So that's where this money is put. Notice there's 17 million right here and 16 million right here. So just from the financing activities alone in the last 6 months, they generated $32 million. But how much did they generate from running the business? Well, they actually lost almost $8 million. So remember how we were talking about how they went from 185K to having 24 million? That's that. That's where the money came from. It came from financings, guys. They actually lost. If it weren't for the financings, this company would have went bankrupt from all the money they lost from running the business. Now, what's important is to know how much money they burn running the business. So this is the number that I divide across this time period. So we're going to take the $8 million and divide it by 6. I believe it's like 1.3 or so. Let's just do 8 divided by 6. Yeah, $1.3 million a month. Now, take notice that in the previous 6 months at the end of 2017, they only burned $1.5 million for that whole 6 month period. So that's, if I recall, it was like $250K a month. So what was the difference? Where would that discrepancy come from? And you have to kind of look up here and see what accounts had to be adjusted in order to get to these numbers, and you'll look for the big ones. The big one was JMJ. He got paid for his, basically JMJ's company or individual that has been bankrolling these guys since they were on the OTC. So they gave him a ton of equity, and I don't remember how the deal was completely done, but that's where that came from there, as well as down here their accounts payable and accrued expenses. And one of the things you're going to want to do is you're going to want to compare these numbers against the 10K and the previous 10Q. So I'm going to open up another tab real quick, and we're going to do, first let's look at the previous 10Q, okay? The first quarter of 2018. We're going to scroll down to their statement of cash flows, and you're going to see, look, they burned 4.8 million of this 7.9 million was done in that first quarter. And that means the other 3 point whatever was done this quarter. And you'll see that the 3 months ended 2017 it wasn't even a million. So still on track with that 200 to 250K a month. You'll notice that 5.8 million to JMJ was taken out from the first quarter. So you have to also understand that that number is not going to be reoccurring. So their burn rate should continue to drop if that was a huge factor, as well as their so these change in fair value of warrant liabilities. That is a warrant write-off. You'll see that most of that came from the first quarter as well, 3.6. So only like 600K of it was written off in the last quarter. So that will shrink. This 5.8 million will go away. So they're gonna probably go back to being more around, burning around 500K, let's just call it, a month. So this is how I would write it down, and these are the numbers, these are the 3 main numbers I'm looking for to look at the financial situation of a company if I'm doing the quick little 5-minute peekaboo during the pre-market. And what I really want to know is, if they have 24 million and they burn 500K a month, how far out will this take them? Well, quite a while. That's freaking 4 years or so of money they have if they don't change their burn rate. And so that just shows me there's no red flag as far as their immediate need for cash. And that's one of the things you're looking for in these financial statements is there a red flag saying they need cash bad? And obviously if they say if the statements show they need cash bad, the very next logical step in your brain should be like, well, do they have a shelf? Do they have some way of financing the company? Or is this going to be done through a pipe? Yada, yada, yada. Basically, you're trying to be a detective, right? So there is no red flags for BL&K on a cash basis. Now, it's not to say that there's no other red flags and there's no reason this thing shouldn't have some downside to it. In fact, there is, and that's from previous dilution. And let's just go back to that one thing I told you we would look at, which was the change in the stockholders' equity. Now, this is in the last 6 months, everything that's happened to their stockholders' equity, like the amount of shares that were in it. So you can see the very beginning of the year, their OS was 5.5 million shares, and they ended this most recent quarter with 25 million almost. So you can see they have sold a ton of shares throughout the last 6 months, and those shares were probably bought in private placements and public offerings and things that will eventually be people that want to sell to realize the profits, the gains on their investments. So that is where you're going to find the overhead supply. You're going to see lots of people are going to have a reason to sell if this thing pushes to certain prices. And you'll see that here they had Series A convertibles. They got rid of those. They no longer have those. And how do you think they got rid of them? They converted them to common stock. Okay, so that was common stock that people converted. They had Series C. They no longer have Series C. Those were probably converted to common as well. So this you don't have to know too well, but it is, in case you want to go look at it. It's very interesting, to say the least. You guys could study these and gain a lot of insight as to how much the OS got bloated throughout the last few quarters and things of that nature. Now, I do want to show you guys a few other things in the Qs, and that's the liquidity and financial condition of a company. And this is where you'll see whether or not they're operating as a going concern. And you'll also see a few other pretty interesting things. So you'll see that they'll talk about the public offering they did and the money that it raised. And if we keep scrolling down, we're going to get to, so here's the thing on JMJ. I highly suggest you guys read the deals they've done with them. So here are, let's see, here's the last offering they did in the stockholders equity section. Here's where they talk about the preferred stock. There's warrants. These are all things that you need to be taking a quick look at. In the last video I showed you guys how to find these warrants without reading the whole thing. You know, you guys can make sure you're using Control F, Command F. And these are just notes, like summaries. Liquidity and capital resources. This is an important section, guys. This is going to lay out all the recent offerings and things they've done to raise money. And very important stuff will be found in here, okay, on every company that you look at. So that is the 10Q. Let's look at the 10K just to point out some of the differences, guys. Now, in the 10Q, all those financial statements come at the beginning. In the 10Ks, they come at the end. So you can use the table of contents. Usually they're at the end, so you can just click here, and it's going to jump you straight down to it. And if you scroll down, you'll start seeing them. Now, everything here is for a full fiscal year, so every number, if you were to break it down to months, needs to be divided by 12. But yeah, you would look at these just the same as you would look at a 10Q. And then you also have all the same stuff. It's just kind of located in different areas. The 10K is much more comprehensive though, guys. And here's more of this JMJ stuff. So let's take a look at another example. Let's do FLKS, since it had the big fade today, guys. And I already did the digging on them. We can do it again real quick, and I'll show you how fast we can do this. Watch this, guys. So we're going to look at the 10Q. Going to just grab their OS. And this one was as of July. Need to know their cash. So 15.8 million. Always remember to check and see that the first column is actually the new, and not, sometimes they'll flip it, and if you're not paying attention, they'll catch you slipping. But June 30th, so this is the one that we're looking for. So 15.8 mil as of end of June. Whoops, I did not mean to go to the next. And then we want to know their working capital. So if you look at the Current liabilities, we got 3.8 million, and current assets 16.9. So that's leaving us with 13 mil net working cap. So they don't seem to be hurting for cash that bad, right? 13 million working capital. You would think that's really good. Let's keep going. Let's go look at the burn rate. Oh dear God. This is for 6 months, guys. So this is the world of biotechs, all right? You're looking at a company, biotechs, typically the cheap ones, especially that are clinical stage, do not have revenues. They don't have a product they sell. So all the money that they use to run the company is usually raised in offerings or private equity financings. So look at 17.7 million divided by 6. So they burn almost $3 million a month, guys. Now look, if you have $16 million at the end of June and you burn $3 million a month and it's October, you see where I'm going with this? Hopefully you do, guys. So June was July, August, September, October. We're talking 4 months. So that's 12 million gone. So these guys should have like 3 million in cash. Okay. And yes, we want to compare these numbers. You can see that even if we take the lower number here, which was a year ago, it's comparing the same half year from so sometimes the BLNK example I gave, this here was December, right? They just used the end of the fiscal year and compared the previous 6 months. So this is actually the same time period from the year prior. But you'll see, even if it was only 14 million, that's still burning a ton of cash, okay? And we can also check their 10K and see if it's kind of in line with what we just saw. So we're going to go to the K, check out the financial statements. We're going to go down to the net cash used in operations, okay? And look, you're going to see that year after year after year, they're burning at least 2 million a month. Actually, back in 2015, not quite. But in 2016, that's almost 3 mil a month. In 2017, that's well over 2 million a month. So we're seeing that that's pretty much, this is on par for the course, guys. 3 mil a month. We can even put that at 2 mil a month. It doesn't matter. What matters is the red flag generated from the fact they're strapped for cash. And look at the financings. Actually, they did not actually raise that much in 2017 through them, nor in 2016. And if I recall, so what we're going to quickly look at is their offerings. They do have a shelf, guys. We talked about this, and you see it's from 2016. They haven't used it, and they can't really, because their MVPHS is so small that I think the most they could probably raise is around 2 million. And they need a lot more cash than that, especially with a burn rate of 2 million, right? So even if they raise $2 million, what's that do? It kicks the can down the road a month. So let's do EARS. Now, EARS is a funny one because it's a foreign issuer. And so they only report the 20 Fs, but you can look over here and they have interim financial statements, and they were filed recently. It's for the 6 months, and 3 and 6 months ended June 30th. So this is still going to be what we're looking for. It's over here in the 6K. Let's now, obviously, I'm not going to find the OS from this filing because it's not their 10Q. But if I recall correctly, their float was like 17 million before the conversion of all the warrants that they had to dump and stuff. I think it was 24, 25 million on the OS. I don't need to put that in here. This is not a webisode on finding floats or OSs, okay, guys? I'm just trying to show you how to look up the financials real quick of a company. And so Let's look at these guys. So this is in Swiss francs, the CHF, and real fast, CH2. Look, it's 1-to-1, guys. So you can pretty much just count it as a US dollar. So if we see, is it in thousands? It's not. So guys, $206,000, not a lot of money. Let me verify this isn't in thousands. It's not, I don't think. I don't see it. Yeah, it's not. So, oh, but that wasn't cash either, is it? That's property and equipment. Here's the current assets. I'm sorry, guys. Dude, sometimes they do it funny like that. I'm happy I actually found a example like this. So make sure what you're looking for is what you're looking at. So we're looking for cash, guys, and cash equivalents. It's this number. So let's just say 4.4 million cash, end of June. And so now we need their current assets, which is here, 5.2 million, and their current liabilities down here. So here's a good example of negative working capital. So they have more current liabilities than they do current assets. That means they are not solvent. Based on the quick ratio, it would be a negative quick ratio, or not a negative quick ratio. I'm sorry, guys. It would be less. The quick ratio would be less than 1, and just means that if they needed to pay off all of their current debt, like their near-term debt, they would need more than their liquid cash or current assets. So they would probably have to either do a raise or sell off some of their assets, like their if they have a plant or a facility or heavy machinery or something they could sell. But thing is you can't just sell that in the blink of an eye. It takes a little longer. So you can see if you subtract 9.4 from 5.2, you're looking at about negative 4 million, 4.1 million or so. Whoops. So you can either put a negative number in working cap, or you can put 4.1 negative working cap, whatever suits you guys. So that's a red flag, okay? And so what we're going to do is come down to their cash flows, and we're going to see, boom, they also are big time cash flow negative. They burn what looks like in just the last 6 months $1 million a month. You see the same time frame last year. Yep, both of them are 6 months. One's 2018, one's 2017. Was more than 2 million a month. Okay, so burning $1 million to $2 million a month and having 4 million cash shows you guys ears is hurting for cash. Now, every company you dig on, guys, is going to be different in terms of what can they do to get themselves out of that rock and a hard place, right? So with ears, they have warrants. So the warrants can be exercised, and that generates cash for the company. With FLKS, their probably only hope is a pipe. They can raise 2 million from their shelf, something like 2 million or whatever, but even a pipe's going to be tough for them to really get, because it won't be on good terms or beneficial terms to the company. And BLNK, they have convertible debt or preferred convertibles. They have warrants, and so that's how they can do theirs without. Well, actually, I forget. I'm sorry, guys. Blink didn't have a red flag for the cash situation, but had they, then you would know. Okay, that's what their situation is. Let's do one more. Let's just do FFHL. I think that was the ticker, right? Yeah, and you'll see all of their filings here, as far as where you would see a shelf, hella old, right? So it's another foreign reporter. Here's the second quarter fins, and these are in RMBs. Okay, they give us US dollars as well, so hopefully that doesn't change. Yeah, they do. Okay, so is it in thousands? It is. FFHL. All right, so cash, end of June, 3.8 million. Quick ratio and their working cap is going to show us current assets 16 million, current liabilities 42 million. So lots of extra cash to keep them solvent. Let's just do 42 minus 16. So it looks like about 26 million working cap. And see if they are cash flow negative or positive. These guys are cash flow positive. Now, this is one of those things, guys, where when you see this, it's not your typical turd. That means these guys are making money from the running of their business. Let's look at their, where is it? Net sales and revenues. Or net sales is revenue, sorry guys. So they're making $12 million in 3 months. So they're generating like $4 million a month. They are making a positive gross margin on that. Now, they do have a negative gross or operating margin here. Let's see. Where do they turn this around? Okay, so it looks like they're not in the best of shape as far as the business, but when you settle all the accounts, you do end up with net cash positive for their statement of cash flows. And you can go through this line by line and see some of the stuff that helps them, like depreciation of their equipment. Yeah, I'm sorry, I should have just started right here at the top and you would have seen, yes, they do have a net loss, but when you settle out all the accounts, you're going to end up with a net positive down here. Some of it's inventory, actually quite a bit of it's inventory, and depreciation. Those are the two main things that turn that around. A little bit more on the accounts payable. But out of all the ones we just looked at, right, these guys are by far the one that is the least red flags, because one, they're not hurting for cash. Two, there is no shelf filed. There's nothing here that says they even have the ability to do a raise. But knowing why the company ran always helps too. I'm pretty sure there was a newsletter out on these guys, and it was some chat rooms that got in on it. And oftentimes, the chat rooms get in on it, and it's more about last one out is the one left holding the bag. So I can't even, you know what? I've been on vacation with the family and stuff, and I didn't watch the close. So let me go and see real fast, what did they close at? Because FFHL, yeah, they had an ugly daily candle. And if you look at the chart, that's kind of what you expect from them, because there's no volume on this company ever. Nobody wants to be that person that bought it and is holding it and realizing, oh, all the volume's gone, now you're just left holding the bag and no one left to buy your shares. So that's what happens with these types of companies. So even though it was no financial red flags, guys, a ton of red flags based on the daily chart and knowing what made the move happen in the first place. So hopefully that kind of clears up some of the financial questions you may have had on how to use a 10Q. Remember, the 20Fs are just the same as a 10K for a foreign issuer, and if you go in and read these, you will see the same stuff, but it's just called a 20F. And I think some companies even call it a 40F. I'm trying to remember if like Acosti did that, or maybe NEPT, NEPT. Not even sure. Yeah, see, these are 40Fs, and I think maybe that's just a Canadian issuer. But remember, if it's a foreign issuer, look in the 6Ks for their quarterlies. If they're not in the 6Ks, here's another thing you can do. Go to the company's website. there will be a thing for like either investors or investor relations, and they will have filings and financial reports. So don't think that if it's not on BAMSEC you can't find it. If it's a reporting company, they have to. I think that's about all I wanted to cover, guys. I'm hoping that the main takeaway from this, guys, should be how you can do it quickly, because this is just trying to get a quick overview. Are there red flags from a cash point of view on these companies? And if there are, I guess the next logical question is it something where you think there's going to be a raise after hours? Is there warrants and other overhead that's going to kill the run today? So it could be an intraday trade. Basically need to know who you're playing against and what lies ahead of you guys, and that's what the financials help you do. But as always, remember, the fundamentals only help you get a bias, guys. They do not tell you when to push the button. If you don't know when to take the trade, it's from technicals. You have to know how to read a chart. You have to read the price action. You have to read the volume. So don't take this information I'm giving you guys and just go out and find red flags and short and think that you're going to be safe. You must know how to enter a trade from a technical perspective, guys. And I will be very I'll be very heartbroken if I find out a bunch of people that have been watching these videos ran out and blew their accounts up because they were too anxious to jump into a trade that they found red flags on and shorted way too early and got stubborn. And that's what happens. A lot of people get stubborn because of the bias they generate from the filings, and then they don't want to take the small paper cut loss, and the paper cut loss turns into a big loss. So guys, please stay safe out there. Protect your capital. That's always the first rule. Do not think that these SEC filings are the be all end all, going to make you multi-millions of dollars instantly, because nothing's further from the truth. Make sure you have your technical game down on point. Till the next webisode of How to Dig, it's your boy Ricky Analog. See me over at stocktraders.net. Peace.